Hey everyone, my name is Sherry, and today my guest is Yusuff Alabi Aji Dagba. Correct me, I know I might have butchered that. Um, but he is a tax strategist and my friend, so I get the benefit of, having these conversations regularly with Yusuf, and we talk about life, we talk about finances, we talk about all the things. So, Yusuf is today sharing some of his expertise with us, and really excited to learn a little bit more and talk through some things. So,
It's a pleasure to be here. It's a pleasure to be here. It's always a joy to talk to you.
absolutely. Same. So tell us a little bit about you, Yusuf. Where did you start? What created your interest in tax strategy and what you're doing today?
So my journey into taxes and taxation came from a very uncanny route. As a former retail executive, and I also own multiple businesses as a former retail executive in the retail space, of course. And just one time, it might have been around 2014. I've always done my own taxes myself using
Hmm.
TurboTax, et cetera, et cetera. But then
Hmm.
my businesses was doing okay, and I gave my taxes to a really large CPA firm,
Mm.
and that's the first time in my life I've ever owed money. Right,
Okay.
so I said to myself, something gotta change. I had to like figure out why, because no one could explain to me why I owed money. So I started to do the digging, and then I learned, and I started to apply what I've learned to my own personal taxes, and I started helping friends and family. And here I am, almost 12 years later,
Wow.
as a tax strategist.
Wow. And you're enjoying what you do. You're
I
and
I
I
enjoy
would say
every I enjoy
passionate.
every moment of it.
I would say that I feel like you live it, you breathe it. It's in your personal. It's in your. So that is a wonderful thing to
Mhm.
to really enjoy what it is that you're doing. What would you say is the biggest misconception that people have today about taxes?
There are so many. I think that one of the biggest misconceptions, if I had to point at one right now, is there's so many. Like the biggest one is you don't have to file your taxes.
Hmm.
Right? That is the most asinine and crazy thing that I've heard. Like file your taxes. The IRS are not the bad guys.
Hmm.
Right?
Okay.
Just file your taxes.
What about the big car?
Oh, the big. Oh my God, that's another. That's another one too. So the G wagon strategy. It's
Yeah.
one of the most overly publicized strategy on TikTok and Instagram. And so many people go out and buy these $200,000 cars thinking that it's going to help them save money on their taxes, but they don't even understand the nuances that go into it. So I'm going to make it clear. If you have a business and it's not already profitable and you don't have a $200,000 tax problem, do not go buy a $200,000 vehicle.
That
It's that
makes
simple.
sense to me.
Yeah.
That makes sense to me. You can't spend more than you're making in business.
Exactly. Exactly.
All right. Um, so I know that we've talked a bit about in our day to day about what the difference is between tax strategy and tax preparation. Tell our viewers, our audience, a little bit about for you what that difference looks like
Yeah,
and
absolutely.
mm-hmm.
So when it comes to tax strategy versus tax preparation, you gotta look at your regular day to day tax preparer as reporters. They report in the news. The season has already happened. This is why you see so many tax preparers pop up during the month of
Mm.
January and April because they're only reporting the news based off the data that you give them.
Okay.
Whereas a tax strategist can dictate the weather, right? So you come to us all year round. We don't take summer off. We don't take winter off. We're
Mm.
working all year round to help you come up with the best possible strategy so you can ethically and legally pay the minimum taxes possible that the law allows.
Okay. What about I think we talked about ghost preparing at some point, and how does that impact someone when they, go to someone like that?
Oh yeah, so ghost preparers, they are probably one of the most unethical ways or unethical preparers that file your tax returns. So let's say, for example, first of all, a ghost preparer is someone who do not have a P10 and basically is avoiding. They even may have a P10, but they're just not putting it on your tax return, right? And most ghost preparers charge you a percentage of your refund. So just so people know, it's illegal to charge a percentage of your refund. Most people don't know that.
I didn't know.
So many ghost preparers will use TurboTax. They will use Free Tax USA. They won't put their name on the tax return. So when you call the IRS and say, "Hey, this person did my taxes," there's no paper trail. Or when the IRS come back and say, "Hey, we want that refund back," you have to pay the whole thing back because there's no paper trail. And ghost preparers usually disappear after they complete your tax
The
return.
tax returns.
Yeah.
That's what makes them the ghost.
Yeah, ghost preparers.
Wow. Shady.
The shady business, baby. Shady business.
So, what I would say what distinguishes you from just someone who does the taxes? Like how do you separate yourself?
All right. So when people come to me, let's say for example, you have a CPA.
Yeah.
You go to the CPA, and I work side by side with a lot of CPAs.
Okay.
CPAs are more like generalists. They are more of your, in most cases, not all cases, they are more of your primary care physician,
Okay.
while a tax strategist is more of a specialist.
Okay.
They are more of, think of them as your nutritionist. And they, like, my role as a strategist is to make sure that you have the best strategy going during this current year that we're in now, and also going into the following year.
Okay.
And strategies could range from tiny line items to really big shifts in your even wealth building, right? That's a part of tax strategy.
Okay.
Tax strategy is really big. It's a really broad topic.
So, in my line of work, right, usually they're very wealthy people who, at whatever level they're at, usually it's, several million at a time, will get the benefit of a tax strategist and a whole team of people who will come in and, look at their finances and give them all of the advice that you were talking about, right? Which keeps rich people rich.
Absolutely.
Right? How can someone who's an average, not in the 1%, 75, 50,000 a year, how can they benefit from a tax strategist?
Oh, they could benefit meaningfully, right? So first of all, tax strategy is not only for the wealthy. No matter your income level, tax strategy is needed, in my personal opinion. Looking back, I needed it when I was making $50,000 a year 15 years ago.
Yeah.
I needed it when my income increased at different stage levels. If somebody gets married, right, you need tax strategy as well, right? If you have a new addition to your family, you need tax strategy as well. If you inherit a house and you are still a W-2 employee, you need tax strategy. Like, there is strategy for every scenario, and every scenario is not one size fit all. Biggest misconception: just do this. Oh my God, there's internet gurus and TikTok gurus. Go buy a car, do the Augusta rule, do the accountable plan. It's not one size fit all. You may not need none of those strategies.
Yep.
You may need the ROBS structure. You may need a two-factor entity. You may need so many things that your gurus are not talking about.
And when you say, okay, tax strategy, right? Because we started talking about it, but would you break that down for someone who has no idea exactly what's involved in your plan?
Yeah, absolutely. So tax strategy, at the very finite essence of it, is just planning out your numbers for the year,
Okay.
right? No matter your circumstances, always have. It's kind of like the vital check of going to a doctor, and it's doing to put the heart monitor on your arm. Just checking your vitals, and that's exactly what tax strategy is. And and that's meaningful at every single level. If I come to let's assume I make $17 an hour, and I come to you, my tax strategist, and say, hey, I want to A, make sure I get the maximum refund possible, or B, pay the least amount of taxes possible back to the IRS.
Yeah.
I want you to look at my circumstances, and everything is all circumstantial. So it's not, again, we could both make the same amount of money, and our circumstances are going to be different.
Yeah.
Absolutely.
Absolutely. So when we talked about this previously, one of the things that you mentioned was if you're coming to talk about last year, it's too late. But at this point of the year, we can still make some strategies and talk about planning for what you want to do in 2026.
Absolutely. Right. So, tax strategy needs to happen during the current year. Right. If you come to me and say, hey, what strategy could I, let's say you come to me, hey, I have not filed my taxes in 3 years.
Yeah.
What strategies could we put together for 2023, 24, and 25? There's absolutely nothing I could do for you. Right? The year ended. Right? Let's talk. Let's focus on the current year and let's move on. Now, granted, we could look at some things and file amendments, but that requires lots of documentation and paperwork, which 80% of my clients or people I work with never seem to have.
Yeah, no, of course, because it's not things that you were thinking about when the year was sort of,
Correct.
going by. What is the strategy that you would say no one knows about? A little tax strategy secret, if you will.
I'll give you a easily missed strategy
Okay.
and a strategy that almost nobody's really talking about. Um, so the simple one that everybody should know and understand is cash versus accrual.
Okay.
Understanding that different nuance of your accounting method could help you a lot depending on your structure, right? One allows you to fast forward your income and expenses. The other one allows you to delay it, right? And I could go into a rabbit hole about the two, but most people, I think 95 to 99% of most people that file their tax return, business tax return, using the LLC and the Schedule C, they usually always click cash, right? And that's because their tax preparer themselves may not know the difference between cash and accrual, right? And that sometimes hurts. But then again, that goes back to tax strategy, because if you come to a tax preparer in January and you say, hey, my accounting method was accrual, where's the proof, right? Because that requires IRS documentation as well to convert your accounting method,
Okay.
right? So that's something that's almost everybody should know.
Okay.
And one that very little people do know is the ROBS structure.
Okay.
This is when you could take your investment, your retirement, let's say your 401k, for example, and move it over to your C corp and have your C corp start a 401k plan, and then use your retirement plan to buy shares into your C corp. Then you can use that money to fund the growth of your business or go buy other businesses that your C corp will own. So that's another easy. I'm not calling it easy, but that's one strategy that most people don't know about.
Yeah, I certainly have not ever heard of
Yeah,
that.
especially if you're trying to grow a business and a
Yeah.
brand. And let's say you want to buy a laundromat,
Yeah.
and your credit is not at the best. You could, smartly plot your 401k, but convert it that way. This
Yeah.
way, you're not paying taxes on it, because the whole move is all about tax free,
That's true.
right?
Tax
So the
free.
ROBS structure allows you to do that tax free.
Okay, very good. Okay, that is really a great strategy. Honestly, I didn't know about it, and as you know, I'm in the business world every day.
Yes.
So probably something that I can also share with clients who are looking to expand, grow, and maybe not in a position to borrow, because it does come up
Yeah.
pretty frequently. How much money can one save with using your tax strategy plan?
It's relative.
Relative.
Some
Okay.
people, some people's strategy may not be necessarily tax savings. It may
Mm-hmm.
be wealth building. It
Mm.
may be control. Like for example, um, open up a trust. For example, right?
Okay.
Some people want to trust, but they don't want to trust for the tax savings of it. They just want the trust just to avoid probate and different. There's different things you can do,
So
right?
in
So
case of death.
Exactly right. So that's where I would tell you, hey, go get a revocable trust versus an irrevocable
Revocable
trust,
trust. Mm-hmm.
or vice versa, depending on your circumstances.
Yeah.
So the world of tax strategy does not just stick with taxes, but it also goes into wealth building
That is true.
and shielding yourself also, right?
Protecting your assets.
Protecting your assets.
Yeah.
Love it.
Yeah.
Right. And that's when I go into my life insurance bill. And in my personal opinion, I think everybody should have life insurance, and it should be 10x your income.
Okay. 10 times your income.
Correct.
Okay. Term or whole?
Pros and cons of both, right? And
Mm.
again, that strategy we have to sit down and talk
And
about it,
talk about
right?
it. Okay.
But I am pro permanent insurance.
Okay. So
Right.
whole life.
Whole life IULs.
Okay.
I'm pro those products. But
Why?
there are needs for
The
term life.
shorter term.
Exactly right. And
Mm.
some of my clients do get both because
Okay.
both of them are meaningful depending on your strategy.
And depending on where you are in life and what your budget
Correct.
allows for.
Correct.
So you're saying better to have term than nothing.
Better to have term than nothing.
Okay.
Absolutely. But let's keep in mind, depending on the product, depending on the state that you're in,
Yeah.
that could impact you significantly when you turn 65.
Okay. Shifting a little bit to like business owners and how they kind of go about tax strategy. What are some of the biggest tax mistakes you would say business owners today are making?
Oh, the very first one I think I see the most common
Mm-hmm.
is everybody runs to a CPA.
Mm.
Everybody runs to a CPA,
Okay.
and I know. So for context, I also run a tax preparer program where we teach people how to be tax preparers,
Okay.
and we have CPAs who come to us to learn how to do taxes as well.
Okay.
And that's one of the largest things that people don't realize, especially business owners. They think CPAs are what's the golden grill, golden gate.
I guess like the top of top of the food chain when it comes to your finances. I guess.
Exactly, the top
Yeah,
of the
yeah.
food chain. I like
Yeah,
that,
yeah.
right? And not every CPA study the same thing. There are many CPAs that do not do taxes at all.
Mm.
I've had clients get referred to us because by their CPAs because the CPAs don't do taxes.
Mm.
Right, and every CPA, it's kind of like every doctor don't study the same type of medicine.
Yeah.
Right, so people have to look at it, and business owners don't know that information.
Right.
Oh, can I do a plug real
Yeah,
quick?
of course.
So that's why on August 1st, we're doing a free webinar to teach business owners about tax strategy and many, many more things. We have a handful of experts, handpicked by me, that's going to come and talk about these things that business owners can benefit from.
And it costs.
Oh, it's free, baby.
Ooh.
It's free.
Free?
It's free.
Okay.
Yes, ma'am.
That is rare in this day and age
Yeah,
where you
'cause-
get valuable information for free. So that's wonderful.
Absolutely.
Oh my gosh.
Absolutely.
Mosquito. Oh, sorry. We're outside in Brooklyn, and so we're being eaten alive just for for the fam. All right. Sorry, that was a distraction. Should I buy a vehicle through my business if I were a business owner? Would you recommend that?
It depends.
On?
It depends on your circumstances, right? So number one, if you're going to buy a vehicle,
Yeah.
why are you buying the vehicle?
Okay.
Right? Is it for business use or personal use? Right? These things matter.
Yeah.
Right? So let's say, for example, if you are buying a vehicle to put on Turo, for example, it may make sense,
Yep.
right? But the car literally has to go on Turo.
Okay.
And then it allows you to deduct expenses. And those expenses may possibly lower your tax obligation. So that's why these strategies matter, but it all depends. Now, on the flip side, if you want to go buy, let's say, a Honda Civic just because you want to buy a Honda Civic, that's not really a strategy. So now you're paying $20,000 for this car on top of whatever your tax bill is. That's not really a smart planning.
Okay. Do you think that, okay, so I know that there's a distinction between, what is it, a hobby and
Oh yes, yes, yes.
right, and an actual business where the
Yes.
IRS sort of like decides, okay, you've been doing this for a when at what point do you think it's valuable to to
Yeah.
get the to make that transition, I guess.
Yeah. And again, depending on who you talk to, you may get a different answer.
Yeah.
But so the IRS says that you have in the 5-year window, if your business is not profitable within 3 years of that 5-year window, for 3 consecutive years
Okay.
of that 5-year window, they may degrade your business as a hobby,
Okay.
right? And I see this happen too often where too many people stack different types of businesses into one LLC.
Okay.
And then I also see it again where people have the same LLC for the past 20 years that has not been profitable, and they use it, quote unquote, to take a loss, right? It's unethical, and the IRS do catch up with people.
Well, I hope you're doing the ethical way, folks. What's one deduction? Sorry. If you could give a business owner one piece of tax advice, what would it be?
Get knowledgeable.
Get knowledge.
Get knowledgeable.
Okay.
It's extremely important. Yes, it's cool that you pay professionals to do the work for you,
Okay.
but it's cooler when you understand what their job is supposed to be.
Okay.
Don't let don't let their title or credentials be a shiny object. Not every doctor performs the same way. Not every lawyer performs the same way, and they all have the same shiny object credential, right? So get really knowledgeable. And if you find yourself as a business owner teaching your CPA, your tax strategist, or your tax preparer new information, that's not the right team for you.
Yeah, I feel like with every profession, whether it's doctors, lawyers, whatever the profession is, there should be some continuing education, right? Things
Absolutely.
evolve, things change, things get
Absolutely.
better. And so, like you said, there's some people who are stuck in the old way of doing things, and they don't refamiliarize themselves with what might have changed in the
Correct.
last 5 or 10 or even 2 years, right? With like regard to tax laws. So, I agree with that.
Can I chime in real quick before you ask the
Yeah,
next question?
of course.
So a really good example of this topic is, I think, 2019 ish. So I have a client that I'm working with today. She did the hire your kids strategy based on whether she hire your kids.
Hire your kids. Okay.
Yeah, she did that.
Okay.
So since 2019, she's been paying her kids roughly $10,000 a year,
Okay.
right? And her CPA slash tax strategist never updated her on that information because we're now in 2026,
Yeah.
and you can now pay your kids up to $16,100 a year,
Ah.
right? Saving her even more money,
More money. Yeah.
right? But because her CPA never updated her,
So he wasn't familiar himself.
exactly, right.
Yeah.
And then what's important when I tell people, when I say that business owners need
Yeah.
to know the information,
Yeah.
they need to know that number that you can pay your kids up to every single year is actually the standard deduction. Right. So now, if you pay your kids $16,100 and they file taxes, standard deduction erase that to zero because because they're single, number one,
Yep.
and $16,100 is the standard deduction rate for anybody who's single.
Wow. Okay.
And business owners don't know that.
So he
That little
cost
information.
her a bit of money.
Oh, absolutely, absolutely,
Knowledge is power.
it is.
I really do believe that. And so, it is really one of these things where you you kind of come in and you see, like, there are a lot of, like you said, there are a lot of professionals in the industry. Not everyone is well versed, not everyone knows. So really take your time, seek the information, study yourself, and then see what it is that you may need to adjust with, with regard to your financials.
Absolutely.
What is if I go back to the business strategy, one of the things that comes up often for me is this 179. What is that? Do you know this one? Do you know this one?
Section 179.
Section 179. Is that something did you talk about when it comes to business owners? Is that something big for you? Like,
No, so Section 179 is a part of that G wagon
oh, is it?
strategy. It is,
Ah,
right?
okay.
Because the IRS says that you can write off the full amount as long as the vehicle is
Mm,
over 6,000 pounds.
okay.
And why 6,000 pounds? There is like a long history and reason
Mm,
why for that number.
okay.
But so that's why you do get the G wagons, you do get the cyber trucks, you do get the top of the line Toyota Highlander,
Yeah.
because you could write those vehicles off. Now,
Mm,
Section 179, I've seen that done incorrectly so many times. So let's say you have a regular sedan. Let's use a
yeah.
Toyota Camry, for example. If I'm correct, don't quote me on this. The maximum you can depreciate for that vehicle, because it's not 600,000, it's not 6,000 pounds, is only 20,000 and some change,
Okay.
or maybe 23,000 and some change,
Okay.
right?
Each
But
year?
each year, yeah,
Okay.
correct.
Okay.
That's the maximum.
Okay.
So then the rest has to be depreciated
Mm-hmm.
through makers, which is MACRS, right? Which has another acronym.
Yeah.
So that's another acronym, right? And that's a big miss. And a lot of tax professionals do not know that. So they'll go ahead. A Toyota Camry costs $34,000. They'll go ahead and take the Section 179 deduction on the whole $34,000.
Wow.
Big mistake.
Big mistake.
Big
Could
mistake.
cost you big too.
Oh, it's going to cost the client big. Their client big when the IRS audit them.
Yeah.
Absolutely.
Hopefully that doesn't happen. So if we're switching a little bit to like the investment and wealth building strategy,
Okay.
what's the biggest tax mistake you would say that real estate investors are making?
Real estate investors, one of the biggest mistakes that they're making
Mm-hmm.
is overall structure,
Okay.
right? So if you're an investor, you should have your structure, entity structure, well defined. People are buying houses in their personal names, and it's okay in the beginning if you need to
Mm.
build,
Mm-hmm.
but ultimately get it out of your personal name, get a trust,
Put it in a trust.
um, or a LLC, or a C corp, or a S corp. It all depends on the structure and your strategy. What's your goal,
Okay.
right? And if you don't have a goal, it's okay, but at least try your best to get it out of your personal name and do a quick deed claim if possible. And again, some mortgage brokers, mortgage lenders may have their own fine print laws around that,
Yeah.
but
Yep.
um, it's 100% doable. But I think that's one of the biggest mistakes that most real estate investors
Investors are
make.
making. Okay. And then how do wealthy people legally, right? We've got all this controversy coming from when I say the top, the very top down,
Yeah.
right? President Trump got,
Yeah.
all of this, controversy surrounding him with his own taxes. So, how do they pay less taxes legally?
Oh, absolutely, right? So let's take Donald Trump, for example.
Mm-hmm.
I forgot which tax year it was. He only paid $700 in taxes. And
Mm-hmm.
mind you, he's a billionaire,
Mm-hmm.
right? But a lot of people don't understand how that was able to happen. And it's the tax code, right? The tax code is over 3,600 pages, but less than 10% of it is actually about paying taxes. The rest is how to not pay taxes. Like I told you last time we spoke,
Yeah.
the cost segregation section of the tax code is about 30 pages within itself,
Wow.
right? Just teaching you how to not pay
How to
taxes.
not pay. I might need to get a copy if you
Yeah.
got one. I could take a glimpse at that.
Yeah, absolutely.
You never know what I might come up with.
Yeah.
And then can taxes actually help you to build wealth instead of taking it away? Because I feel like most people look at it just from a standpoint of, okay, it's the end of the year, I need to file my tax returns. I want to get $50,000, $20,000 back in a tax return. But like, how can that process actually help
Help.
you build wealth versus taking it away?
Yeah, absolutely. So let's talk about the court segregation study, for example.
Okay.
You're a real estate investor, and just pure math, right?
Okay.
You are going to buy a house for $500,000.
Okay.
You're probably going to rent that house depending on where you live at. Let's say you live in New York.
Okay.
right? Because we're here in Brooklyn anyway, right? So it's in New York.
We're in Brooklyn, New York. Plug
Yeah,
for Brooklyn.
and then you rent that house out to a tenant for $3,000 a month, right?
Yeah.
So keep in mind, you bought a property for $500,000. You're renting it out for 3,000 a month, and thanks to the cost segregation study, you're not paying no taxes on it. So you're building wealth and not paying no taxes at the same exact time.
Okay.
So why wouldn't you go buy more houses and follow the same strategy?
That's a good
Right? You see what I'm saying?
question. I
So
do. I do.
and again, this is all part of um, tax strategy, tax planning, and tax execution.
Okay. So then why are some people A not using that strategy, and then B, what would you say some people are getting these huge refunds while others are getting or owing thousands?
All right. So first of all,
Yeah.
a lot of people are not using the cost segregation studies for a couple of reasons. Number
Okay.
one, execution. Um, it costs, right? Some of these strategies cost money. So if I tell a client to go buy a house,
Yeah.
first of all, they have to find the down payment to go
Yep.
buy the house first,
Yep.
right? And then
That's
they have to
usually the
pay
killer for
anywhere
most people.
between $11 to $18,000 to
In
get a
closing.
cost segregation study. No,
Oh.
the study done.
Okay.
The study's not free.
Got
There's
it.
companies, specialized companies that goes into your house and conduct the study.
Okay.
Um, so that's largely why people are not doing it. They
Okay.
think that it's something they could just make up themselves. They don't want to pay the money to have it done.
Okay.
And then to answer your second question, why people are getting these large refunds,
Yeah.
it's happening due to ghost preparers, right? Ghost
Back to
preparers,
those guys.
yes, they are largely the number one reason why people are getting these massive refunds. Imagine you had no kids, right?
Let's imagine my bank account. No, I'm just, I love you, kids.
Oh man. Imagine you had no kids.
Yes.
And you make, let's say, $50,000 a year.
Okay.
Someone inflates your income to maybe $200,000 a year, and then gave you a significant write-off of maybe $150,000 a year.
Okay.
That may trigger a refund,
Okay.
right? And I see so many bad tax returns. It's horrible. It's disgusting. And the person come to me, can you please help me with my taxes? This guy I went to last year didn't do a good job. This woman I went to last year didn't do a good job. It's interesting. Funny story. If
Yeah.
you don't mind me taking the extra
Yeah, no,
90
of
seconds. So I have a client who came to me with a tax return from 2023. She needed amended.
Okay.
So I'm looking at the tax return. She inherited a home from her mom who passed away. And the tax preparer, well, I believe might have been a CPA, did the tax return in a way where she was going to owe $11,000.
Okay.
So I looked at it, I dissected it, and this is why reading is fundamental, right? And maybe because I'm a little bit younger, I don't know how old this person is, right?
Okay.
But chances are they've been doing things the same. You brought this up, right? The same way for a very long time.
For a
They
long
didn't
time.
upskill
Yeah.
themselves,
Yeah.
right? So, I take my annual continuing educations. So there was a box on one of the inheritance forms, and all I did was check a box, and she went from owing $11,000 to now getting a $2,000 refund.
Wow. It's a big difference.
Big
It's
difference,
huge.
huge difference, right?
Yeah.
That's why I recommend people get a second opinion.
Yeah.
It's like you would a doctor,
Yeah. Like Biggie said, she went from negative to positive.
and it's all good.
And it's all good. I like that. All right. So what would you say, given we're living in this huge era of information via whether it's TikTok or Instagram, ChatGPT, whatever.
Yeah.
What's the worst tax information that you've heard someone, or what's the worst tax advice that someone's brought to you that they got from, the internet at large?
Well, this one is actually a life insurance thing. it's silly in a way
Yeah.
too, right? Because I'm really pro AI.
Okay. Yes. Yeah. I know
Right,
that.
I'm pro AI,
Yes.
and this person had this whole argument with me about her term life policy. She came to me for advice.
Mm-hmm.
Um, although my firm we do life insurance as well,
Yeah.
well, we didn't do her life insurance, right? She just came to me for advice, and she says, "Hey, I'm going to go ahead and get this policy, and I'm going to change it later." Like, what do you mean change it later? This is a contract.
Mm-hmm.
You can't change it later. She's like, yes, you can. I can't change it. They told me they, right?
Yeah.
They said she could change it.
Probably someone on
Yeah, probably someone on Instagram,
on
right?
Instagram or
Right,
TikTok.
but
TikTok's a big perpetrator.
yeah, but come to find out, like an hour or two later, it was a AI that told her she could change it. I'm like, see, who would you rather listen to? The guy who spent months and years studying this, or a AI that's injected with wrong information on a daily basis?
Correct. And when I go to my AI for second or third opinions on things,
Yeah.
there is a disclaimer on the bottom that tells you that it
absolutely.
can get things wrong. So
Absolutely.
so not everyone also reads the fine print there.
Absolutely.
Oh my gosh, what a world we are living in. Okay, if you were to be audited tomorrow by the IRS, what are the first three things you'd want to have quick and ready?
If I was to get audited by the IRS, I
Mm-hmm.
would definitely have the address of my tax preparer.
Okay.
But in this case, that's me,
Okay.
right? You want the IRS not. You don't want them going to your home. You want them going to the person's home who prepared your taxes, because that person should be qualified to defend you in front of the IRS. Second thing is you want to have accurate bookkeeping.
Okay.
That's probably the most important thing is bookkeeping, and then a subset to that will be receipts.
Okay.
Everything is documentation, right?
Yeah.
So in my firm, when we teach people how to prepare taxes, we strongly stress that do not put anything on the tax return that does not have proof to back it up,
Okay.
right? For example, if somebody claims to be a chef and they make $70,000 out of their apartment that's cooking food for the neighborhood, great. Where's your menu
Right.
to prove that you have a business? Where's your social media prove that you're marketing? Like, where's the proof at? It's okay if you don't have a receipt. We'll work around that.
Yeah.
But we still need proof that some of these things exist.
Okay. Okay. Very good.
Right.
I have one more question, and then I'm gonna let you rock out. Let you say goodbye to everybody.
Thank you.
In your way. You talked about the tax codes, right? You said the tax codes are written more for you to not pay taxes,
Correct.
right? But again, in in our conversations, the theme has always come back to ethically and doing that ethically, right? So what would you say is the biggest difference between tax avoidant and tax evasion?
Yes.
Uh-huh.
All right. I love this question.
Basically really using
Yeah.
the codes to your benefit and not.
Correct.
Yeah.
Right. So tax evasion, number one, is when a client goes to a tax preparer and say, "Hey, get me back a very specific number," and that tax preparer agrees to it. That's tax evasion, right? Another version of tax evasion is if you owe the IRS money, but you're intentionally not paying it, or you stop filing your tax returns on purpose. That is tax evasion.
Okay.
Now, there's many different examples of tax evasion, but those are the ones that I see the most in my world.
Okay.
Now, tax avoidance is tax strategies. How could I legally avoid paying taxes?
So using the codes.
Using the codes, right? Using the section 179. If this was in the insurance world, I don't pay taxes in that world, but it'll be the 1031 exchange.
Okay.
If I was in the real estate space doing the same exact thing, I would execute the 1035 exchange. So that is all tax avoidance,
Okay.
right? Not and some people are afraid of it too, right? Because like they've never heard of this before. They're not educated. They're not knowledgeable, and it's okay. That's why we're having this
you're
free.
here
That's
for.
why I'm here. That's why we're having this free webinar on
Exactly.
August 1st, to educate business owners, and even W two employees. Right? Maybe you might learn something that may spark an interest and encourage you to want to exit the world of being a W two employee and into your entrepreneurship.
Encourage you to take that leap of faith and
Yeah.
believing in yourself and starting your own
Oh,
thing.
it's a lot of belief.
It's a lot of belief. It's really harder than most people think. Oh, you can do your own thing. It's not that easy.
Oh no, it's not easy at all. And then if you want to take it a step further, I would say go buy an existing profitable business.
Fantastic.
And that's why the ROBS structure may be more beneficial to some people based on what they want to do with themselves.
Fantastic.
Yeah.
Thank you so much, Yusuff. Thank you for your time. It's been really great talking to you.
It's always a pleasure.
In person, in real life, as well as here for, in front of our guests. So please, you can wrap it up and say, goodbye to the folks however you like.
Oh, can I now? So let me
Yes,
get closer
you
to the
can.
camera.
Get closer.
Let me get closer to the camera. So, no disrespect to any CPA or tax professional out there when I say this, but if you are a business owner or thinking about starting a business, you need to be at our free webinar on August 1st at 6 p.m. Eastern. It's free. It's going to be on Zoom. And come learn about tax strategy. Come learn about some of these strategies that you can use and apply to help you save money on your taxes. Thank you.
Thank you. Thank you for your time, Yusuff. It's been great.
It's always a pleasure. It's always a pleasure. Fantastic work.
I think I turned it off. It buzzed in my hand.